only 13% of gamblers walk out of the casino with a profit, while only 1 in 100 traders walk out of the markets with a profit, because the reality is most of these traders are ran by emotions, ran by gambling tendencies, and have no plan of attack. All you actually need is to remember the simple acronym EMPIRE, and in the next 20 minutes or so I'm going to break down each letter of EMPIRE and what it stands for and exactly how it connects to your trading, no matter where you are in your trading career. I guarantee this video will make you a more profitable, more resilient, and overall more successful trader without having to endure the traumas of blowing account after account and beat the odds of just 1% of traders making profit in the markets. The first letter in EMPIRE is E, and E stands for edge. So when it comes to edge, let me clarify on why I should be telling you what edge is. In my decade-long experience within the markets, I've traded multiple strategies and I've traded many years unprofitably, frustrated, blowing accounts, and even though I had a lot of information, I was consistently losing money. And it's only in the last 7 years where I really had an edge and I really made profits. I've made millions of dollars for myself. I've been able to travel the world because of my trading, open multiple businesses. It's given my life absolute time freedom, financial freedom, and geographical freedom. And don't just take my word for it, look at my public track record where I've shared my broker sync journal, or I've shown on my FX book, or most importantly and most impressively I think is for 1.5 years sharing all of my trades for free to the public, something that cannot be faked. And over that 1.5 years I've documented 59.5% gain, averaging 5% gain per month. And how am I able to do this on the public stage with hundreds of thousands of people watching me? It's because I have confidence that I can fall back on proven systems. That is my edge. Now, before alarm bells start ringing in your head thinking I already have an edge, I need to skip this point of video, let me pause you right there, because edge is something that most people get wrong, and most people are delusional in thinking the TikTok videos that they watch or the indicators that they use leads to an edge. When a gambler goes to a casino, they don't just randomly flip a coin and hope for the best. Most gamblers come in with some form of strategy. Let's say the roulette wheel. They maybe pick their lucky number or maybe their favorite number, or they may even memorize statistics and probabilities for blackjack, or even in the poker table what odds to play depending on what cards exist. These are all strategies, yet majority of gamblers consistently lose money. So as a trader, if you just have a way of trading and call it a strategy, I hate to break it to you, but that's not a strategy. That's just a flawed plan contributing to the statistics that 99% of traders lose money. So let's break down what an edge actually is and how it differs from a loose, vague strategy. An edge is where you make consistent results from inconsistent and uncertain outcomes, because when you think about it, the casino doesn't know who's going to make a bet of their lifetime and who's going to lose their life savings. So when there is so much activity going on in the markets or the casino floor, how does the casino always win? And what do these profitable traders do to actually win? Well, we take a step back and we understand what is really an edge, not just a strategy. Think about someone rolling dice, but they are cheating because they put a small nail and weight behind the number 6 on the dice. Now the outcomes are no longer random. There is an increased probability that the dice is going to land on the 6, and therefore in whatever game he is playing, he knows rolling that dice leads to better outcomes for him because he has skewed the odds in his favor. Now let's not take someone that is cheating. Let's actually look at the casino. Why have casinos stood the test of time? It's because it's one of the most resilient, tried and tested business models in the world. If you look at each game in the casino a little bit more closely, you'll realize that the roulette wheel is not a simple 50-50, even though it may appear that it's just red or black, because they have 1 or 2 slots that are green. And those green, known as the 0 and 0-0, are actually for the casino. So what looks like a harmless 50-50 game actually gets skewed to 48-48 with a 4% margin for the casino. And on a specific roll, maybe the gambler wins, but over hundreds and thousands and tens of thousands of rolls, they know the odds and probability will diverge from randomness to their specific edge. So as a trader, we don't just look at strategies and think of how we can trade the markets. We actually have to look at what is an edge, define it from how do we bake in an advantage that has data on our side, and using the law of large numbers, allowing your edge to do the heavy lifting over hundreds of trades. So long as you follow your systems of profit taking, risk, and the specific strategies coded into your edge, you know that over time you're guaranteed to be profitable as long as you can keep control of your psychology. So therefore my advice becomes never commit to trading. Never take that path in life which will only lead you to frustration and failure if you don't know what you're doing, unless you've been able to produce consistently non-random results from random outcomes in the markets. And if you want to see further exactly how to implement an edge, check this playlist on my channel where I go step by step on my exact favorite strategies with many examples and many case studies to really nail it home, because I've done that hard work. I've tested it. I've got the data. I've got the strategy. This is a tried and tested edge. Just go ahead and watch it and find it, and I'm sure it will work for you. Next in EMPIRE is M, And M stands for mindset. Psychology specifically is something that is overpowered in the industry, I believe. People don't have an edge, don't have a real strategy, and they blame it all on psychology. Well, the reality is, first becomes your edge, that is your foundation. Then above that becomes psychology. Because if you try and work on your psychology only and you don't have an edge underneath, your psychology will collapse because you don't have a trading system. And trading heightens every emotion that you will have. But the goal most traders have is to remove all emotion. And that's an unrealistic ask because in the end, we are human. So the approach a trader should have is not necessarily stoic, to be away from their emotions. In my own experience, the best way to deal with trading emotions was what I like to call immersion therapy and exposure therapy, where repeated exposure to that emotion leads to an improved outcome. Meaning the first time you took a loss and you revenge traded and it led to another loss, you felt like you were so stupid and you don't know why you did it. The 100th time you do it, you really question yourself before you do it. You're used to the triggers and you remind yourself, hey, when I do this, it leads to a bad outcome, I'm going to stop myself. If you're not one of those traders that says, I'm going to work on my patience, and therefore you sit in front of your screen and you watch price action and you feel angry and you watch and eventually you burst. Is that the right way? Or someone who notices they're feeling agitated and rather sitting and dealing with that emotion, they close their laptop and they walk away so that they are unable to take bad behavior and bad action within the market. Therefore, to say it is better to do the right thing with bad mindset than to do the wrong thing with good mindset. And this might sound oversimplified, but remember the bar is so low. 99% of traders lose. So if you just have simple steps in place where you have controlled exposure to these emotions by trading prop firm trials, by trading demo accounts, you will get used to that feeling over time without losing serious cash. And my favorite, the word intuition. Everyone throws it around and says, I'm taking that trade because of intuition, because of a gut feeling. Well, the reality is intuition is not your subconscious whispering to you some divine wisdom on what to do in the market. In fact, it is the opposite. You may confuse it for something like when you learn to drive and you're doing everything manually and you're so focused on the steering, on changing the gears, on the indicator. But when you learn how to drive, you might just drive home on autopilot and not really think the whole time, and you just somehow arrived home. And that's because your subconscious brain takes over. That's called subconscious competence, and that is a form of mastery. But that is a mistake in the market because the subconscious competence, this mastery, this is something that you have perfected and pushed down to your subconscious, whereas intuition is the opposite. It's something that is in your subconscious that you haven't fully understood yet, that it is your job to bring it to the forefront and so that you can fully understand it and decide exactly why you do those things. So don't take intuition as divine gospel and your secret edge. In fact, it is something you have not fully understood, which is why it's sitting in your subconscious and you haven't fully brought it to the forefront of your mind yet. And lastly, don't approach trading as a get-rich-quick scheme, because yes, it is one of the easiest ways to make a lot of money. A lot of people in this industry have made millions of dollars by simply pressing buttons on a screen, and they've done it within 2 or 3 years. And there's not many things in this world where you are able to do that as an absolute beginner with no real experience, no real degrees, and none of your own money because of prop firms. And even at my stage where I'm multi-seven figures, I'm still trading the markets every single day because I understand the power of the markets and how easy it can be once you know what you're doing. But I like to say it is the hardest way to make easy money because that learning curve, it is really, really hard. Think about it. If you're an accountant, you don't have to be the best accountant in the world 99% of the way there to actually get a job. Because if you're a half decent accountant, if you're 50% of the way there, you can get by in your job and you can get paid. In general, in life, if you know 50% of things, it's enough to get paid. Whereas the markets, if you know 50% of your strategy, you will get wiped out. And the threshold to profitability is very high. Once you reach it, you open up a world of financial freedom. But the reality is, it is not a get-rich-quick scheme. So you have to act accordingly. You don't treat it like a hobby. You don't go for crazy quick returns and flip mentality. You come in with longevity, professionalism, and realistic small consistent gains amplified by large capital. Just think, 1% gain per month on large capital is enough for me to be profitable. Write that down because that's all you need. So you need to remember that when your psychology is playing games on you. Next in Empire is plan and implementation. Now, I like to have some mental tricks to help me with this one. Number one is on my trading desk, I'll have some poker chips there and I'll know exactly how many chips I'm placing for myself for the day. And when I can physically hold it, each chip represents a trade. And when I'm out of chips, I know I'm done with my trading for the day. And you might be thinking, well, that's simple. You're just saying you have 2 trades per day. And let me tell you, when you have these physical chips, when you can hold it and when you run out of chips, it makes the mental cues a lot easier to walk away. I will have a fixed number of chips for the day, for the week and the month, and I cannot create more chips. So therefore I have to be very sensible because I've got a limited supply of chips and I cannot use it all up in the first week of the month. Next, it might sound crazy, but I'm a big believer in writing things down and saying it out loud. Yes, I will talk to myself because when I'm about to take a trade and I know my plan and I've got my edge and I'm just trying to implement on my edge and my strategy, and then you sit there and you think my XYZ is because I'm feeling feeling a bit of greed. I really want to pass my prop firm challenge and it looks like it might go bullish and I've just got a gut feeling. When you say that out loud, you'll feel like an idiot and you won't take that trade. Or call a friend when you're about to take a trade and explain it to him. When you have that verbalizing of your idea, it really helps you see reality and clarity as opposed to just being in a whirlwind and a mess and getting caught up in the moment in the markets. I write down every single one of my confluences. Within my strategy, within my belief systems, within everything I know in the markets, I condense it down to what is my checklist of things I believe in. For example, time windows, lower time frame confirmations, inducements, the types of inducements that exist, points of interest, the type of points of interest, trend, multi-time frame trend, and then I give definitions for each one. And I put this on the wall as a mastermind so I can see my full blueprint all on my wall. After that, I will set a hierarchy of importance where at the top I'll have my most important one, for example, inducements, and then towards the bottom of the list as it gets less and less important, I might deviate away a little bit from time windows, points of interest, daily time frame or weekly time frame trend, because that's not so important to me. And then I section them off to say these are my non-negotiables, the most important ones where I cannot take a trade where one of these things are missing. It is a no trade for me. And then I have at the bottom my cherry on top. These are just bonuses. These are nice to have to give me more confidence in a trade, but if one of these are missing, it's still okay because I have my non-negotiable mandatory ones. When you're about to take a trade and one of your key things are missing, even if there's 5, 7 cherry on top confluences, but your main one is missing, you can quickly see and remember, hey, even though there's 10 boxes ticked, there's one box that needs to be ticked, is not there, therefore it's not a trade. And if you really want to take your trading seriously and to the next level, this is where you segment all of this out into exact trade models, where you take your strategy, your confluences, your hierarchy of confluences, and you connect them together into specific market plays known as your setups, and you rank them. An A+ setup. What are the trade models inside my A+ setups? Pro trend, major inducement, time window, M1 BOS, whatever it is, you list it out, and those are your A+ setups. And then you make adjustments for your A setup, for your B+, for your B, where you are removing some of those optional confluences, where you're reducing the probability of each trade a little bit. But you might be thinking, hey, why would you want a B+ setup? Well, this is how implementation works. Because if you only take A+ setups, you might take 1 trade a month, 2 trades a month. And the problem is most traders cannot sit in their hands for majority of the month not taking a trade. So therefore, trade frequency is important, not only to satisfy your psychology, but also to increase your rate of return in the markets. So if I took only A+ setups, I've taken 1 trade a month at an 80% win rate. If I take A+, A, and B+, I can now take 7 trades a month. My average win rate might be 70%, and I'm still high risk to reward. So therefore, you know when to deploy your setups within your strategy, because if I'm in a losing period, I'm 10% down, then I know I need to bring my win rate up, A+ setups only. Or if I'm on a hot streak and I know this can't last, I need to cool off a bit and stick to my A+ setups only. Therefore, as a trader, you have a plan, which is these are all my setups, these are the categories, and then you know when to deploy and implement each trade model depending on where your strategy is, depending if the market is trending or consolidating, and so forth. Because this is how a real professional trader does it. They don't just have one setup and just keep rinsing it. They trade it like a portfolio where they have certain strategies based on the risk profile, based on the market conditions, and they deploy different things differently depending on what's going on. That is professional. That's what leads to real profitability, and that's how you have a plan, and that's how you implement it. By the way, that seems really overwhelming and you don't know where to begin. You don't even know what's good concepts, what's non-negotiable. Remember, I have had a decade of experience in the markets. I've helped hundreds of traders get funded and make large payouts. In fact, we specialize within our community on $1 million funding, where we've helped so many people reach that golden number of $1 million in prop firm money. And when they follow the approach of just 1 or 2% gain per month, then it becomes very achievable to make $10,000 to $20,000 a month and have the capital to back you. And how have we been able to help so many people in the community is because we have a simplified trading approach where we pioneered not only inducements, but smart money traps. And when you combine these powerful forces together, you are able to unlock high risk reward, high win rate trading with a high trade frequency, only trading 2 hours a day and trading 2 currency pairs. And don't just take all of the payouts from within the community or my own results, but in fact come and join us and see where we are trading live every single day, 2 times a day, where we are doing one-to-ones every single week, live Q&A calls multiple times a week, and a vibrant, thriving community. Everything that you need in one place. If you are interested, check the link in the description and find everything that you need to apply for that. Next is R in Empire, which stands for risk management. Now, risk management is one of the most important things within the markets. In fact, all of the traders that I've spoken to on my podcast, whether it's a hedge fund manager or an institutional trader or a New York Stock Exchange floor trader, the most important thing that they say in the market is risk management. In fact, a lot of the prop firm owners I've met, I've shook their hands, and when I speak to them about what is the number one reason people blow their prop firm accounts, they say the number one reason is your daily loss. It's not because they go 10% into drawdown and eventually blow that account. No, they breach the daily loss limit. In a single day, they blow up their account because they don't follow risk management. The bar is so low. If you just follow this, you are already ahead of the curve. In fact, on a recent episode, I was joined by James Thorpe, who is an institutional trader with over a decade of experience in the markets. And he said it's the most important thing for profitability that you do not lose in one day more than you are able to make in a single day, boiling it down to risk management and risk to reward. Because for example, on a positive green day for you, on a profitable day, if you can make $1,000, then you know on a losing day, if you lose $1,000, it doesn't blow you mentally because you know the next day, if you get a win, you're back to break even. But let's say on a losing day, you spiral because of risk management, or you don't know when to have your cutoffs and you lose $5,000. Now you know you have to have 5 profitable days without taking a loss just to be back to break even. That mental weight is the reason people spiral into tilt and blowing accounts. And I'm a firm believer, which is why my slogan is a restricted trader is a profitable trader, is because everybody can catch winning trades. You've caught winning trades before. The problem is you take a winning trade and then you take 5 losses in a row after that. The profit you are looking for is not in more winning trades. It's in the losses that you will avoid or the risk management you will have to minimize the size of those losses. Unless you are wildly profitable or you have a lot of experience, stick to just 0.5% risk per trade. Don't do dynamic risk until you're experienced. This is too subject to emotion and lack of experience. Just standardize your risk. Remove that decision from yourself. Always 0.5% risk. So therefore, in a prop firm scenario, you have to lose 20 trades in a row to blow that account. If you do that, it's not a risk management problem. You just don't have an edge. And as long as you have a system like the one I trade where it's high risk to reward, even 0.5% risk per trade, you can still make 3 or 4% gain in a single trade if you follow the exact system that I do. And remember, if your goal is just 1% a month to make life-changing money, then 0.5% risk to make 3% gain in a single trade is more than enough. And lastly, if you don't know how to manage your risk and your own psychology, I coded my own AI risk management operating system, something I've been using for over a year now. I will never charge you for it, by the way. It is a dashboard powered by AI, powered by data that is designed to help your risk systems and your own psychology, no matter what trading strategy that you have. But just remember that 2 traders can have the exact same strategy, but one will make profit and the other might blow accounts just because of their risk appetite and risk control. So don't take it lightly because you could be doing everything right, but the risk factor could be the thing holding you back. And the last one in Empire is E, and that stands for execution. Now, execution is the most important thing in the markets because you can have ideas all day long. You can hope all day long in the markets, but it's when you execute in the markets, when you take that trade, that is what counts. Therefore, you need to correctly identify what is just intuition, what is just a feeling versus what you actually trade in the markets, because they should be separate. When it comes to executions, you need to have a lot of systems and logic in place. For example, time of day. There should be specific key windows in the day that you should trade and shouldn't trade. For example, if you're trading a USD based pair, why are you going to trade that during the Asia session when the US session is offline? It's like selling sunscreen in the winter. It makes no sense. Trade when the markets are active, liquid, volatility is there, and trade the appropriate key windows that are not only more advantageous for you because it is increased probability, there's more momentum to take your trade towards your take profit level. And I do want to give a dose of reality here because through my podcast, I've been able to speak to hundreds of professional verified traders, and I've attended many conferences, international expos and seminars. In New York recently, I was at a private quant event where there was leaders in quant finance and how they're using AI to trade the markets. Completely different to how I trade, but they have their own protocols, beliefs, and execution criteria. You can trade any way in the markets, whatever your strategy may be, but it always boils down to what is your execution protocol. Remember to define that. Don't just have an edge, don't just have concepts and theory. Convert that into ideas, convert that into protocols, for example, A+ setup, A setup, and that convert that into execution rules. When to trade, how to execute, exactly how you turn your idea to a working trade. Now, if you take this acronym Empire and you want to convert it into real life working strategies with implementations and case studies, go ahead and check this playlist on my channel where I break down exact strategies step by step with exact examples so that you can actually get started right away. And remember, as always, a restricted trader is a profitable trader.